Feeling it.
Okay, I think we're ready to go. Good evening, everybody. Welcome to the Slice. Hey! Quick introduction. You might have known me from my time over at the Owl. My name's Stephen Ford. I'm now the manager of engagement with the Allied Arts Council, just now around the corner. And one of the things that we do with the Allied Arts Council is once a month we do these professional development sort of sessions, and this is one of those such sessions. And this one revolves around taxes. But before we get going, just a really quick important thing. I want to do a quick land acknowledgement, just to acknowledge that we are on the lands of the Blackfoot people and Treaty Number 7, and we want to pay respect to the land. And yeah, I always think with land acknowledgements, it's great to verbalize these things and to do that, but it's also important to actually, put in the work and maybe do some beyond just saying these kind of things, like actually research it. Maybe read a little bit about the history, because that's, if we want to actually talk about reconciliation, that's how we actually do it. It's not just memorizing a paragraph that we recite at events. It's about actually doing the work. So I recommend you do that. So I'll just leave it at that. Without any further ado, I would like to introduce our guest speaker here tonight. This is Steph Hogan. Everyone give a nice round of applause for Steph Hogan.
Yeah.
So I'm going to refer to my notes to make sure I don't screw up where Steph works
Good
from.
job, Steve.
Thank you. So Steph Hogan currently works for MNP LLP in Lethbridge as a private enterprise assurance manager. What does that mean exactly, Steph?
So assurance is we perform notice to readers, compilations for corporate year ends. So basically compliance with tax.
Okay. Also, I should mention too, I can't see the notes on the online sort of side of things. I'm going to be down there and checking on that because we want to make sure the online folks can hear all the things and that as well. So online folks, if you want to just put in the chat if there's any recommendations that I can try and correct that, especially when Steph is going to do a presentation here in a moment. So we want to make sure that you folks can hear all of that stuff as well. Steph, if you want to get like right up on the mic without it being,
Okay.
there you go. There you go. And
I
for
will.
also for the folks here as well. So you folks are probably tired of hearing me talk. I know I am. So I'm going to yield the floor to the wonderful Steph Hogan, and she's going to give you a little presentation. I've also sent some take-home materials to you via email, the folks that registered. Anybody who has not received those materials, just get at me. It's engagement@artslethbridge.org, and I'll make sure you get all those things. There's a very important spreadsheet that you can use to do your taxes correctly as an artist, which is important. And that's what this is all about. So without any further ado, I yield the floor to the wonderful Steph Hogan. Give it up for Steph Hogan one more time.
I think the only other time I've been on this stage is when I've been trying to steal the mic drunk. So what a change we see in the world today. Yes, so a little bit of an introduction to myself. I didn't start off in accounting. I started off in fashion design and marketing and slowly found out that I am not an artist. I mean, in the grand sense of things, I liked numbers and I liked pattern drafting, and that was kind of the area that I liked the best. So I decided, why don't I go back to school and see what I can figure out with that? And as fate would have it, I chose accounting, and here we are today. At my job right now at MMP, I perform a lot of personal taxes. So right now we're gearing up for busy season, and I've always loved working with artists and small business owners. So this is just an area that I can give back. So our objectives, yeah, go for it, Steve. We're learning. It's fine. Perfect. So a little bit of the objectives today is we wanted to provide you with information, resources, a little better understanding of how you can file taxes on your own or what kinds of documents you should be preparing for your accountant if you choose to go that direction. I'm also going to provide you with some examples. So we're doing some math. Let's go. A little bit of the agenda today, we're going to be looking at different kinds of income. Then we're going to take a look at if you're an employee or if you're self-employed. So we'll start off with distinguishing the difference between whether you're employed or self-employed. So who here has ever received a T4? Woo! That can often signify that you are an employee. I think one important thing to distinguish here is we want to acknowledge whether you are actually an employee of the organization, whether you're a contractor of the organization, or whether you're in a self-employed capacity. So I think one of the areas that we struggle in art areas or in, like, I know, for example, like tattoo shops, you rent a chair at a location and you could be responsible for getting your own clients, taking care of your own book, billing your clients separately, but who's supplying the location? Who is telling you when to show up to work? All of these questions, some factors to consider is who controls the time that that you're at your work, who supplies tools and equipment, who takes that financial risk. If you don't have enough staff or if you don't have enough clients, are you still getting paid or are you getting paid piece by piece, essentially? Who is given the opportunity for profit? Is that mainly on the business owner or do you own that financially yourself? Can you subcontract your work or are you responsible for investing your own capital? So I think that can be applied to many kinds of businesses and not just art businesses as well. Next, we wanted to look at some employee credits that you can claim. Next slide, Steve. Oh, nope, we're going. I just got mixed up. So types of income that you might be looking at earning as an artist. Regular or hourly salary. If you receive any trips or prizes for winning something in like an arts competition, you have to claim that according to CRA as part of your earned income at the fair market value of what you're earning. So oftentimes they'll give you this is valued at $10,000 if you want a trip. That should be included in your income. You run the risk of being audited if you don't include that, but we're just going over the rules. Any grant or subsidy income received by the government. Any bartered transactions. So if you want to trade a painting for landscaping work, or if you got like a tattoo for like a piece of art that you did for pottery or something like that, you would have to record that in part of your income, but you'd subsequently get the deduction for any expenses that you would trade as well. So it kind of works hand in hand. It's just being as open and honest as you possibly can on your tax return. And then lastly, the sale of goods or services. So that would be if you're doing a painting or if you're tattooing someone. That's another type of income. So now we're going to get into the employee options. So I'm just going to move my chair a little bit. All right. So employment income is reported on a T4. All of us said we had had one before, so that's pretty self-explanatory. I'm not going to go into what the slip looks like, but usually the employer is deducting taxes for you, deducting any Canadian pension plans, or EI contributions, they are deducting that and taking care of it and submitting it to the government for you. The tax schedules that you're going to have to use or are available to you are the T777, and that's for any employment deductions. So any expenses that are incurred as a result of your employment or to earn that employment income. And then you would also have a T2200. And that is required if you are going to claim any of those expenses as well. The deadline for filing a employment tax return is April 30th, everybody's favorite day in my world. All right, so now we're going to go through some employment credits. So the first one is artist expenses. And I was talking to Steve earlier, and he said he had no idea that you could claim any of these expenses. So I thought, why don't we talk about them? In order to claim these, you have to be a T4 employee. You'd have to earn these types of income. So if you composed a dramatic, musical, or literary work, performed as an actor, dancer, singer, or musician, performed an artistic activity as a member of a professional artist association, if you created a painting, print, etching, drawing, or sculpture, or similar work of art, that's the criteria to be eligible for this deduction. So now we're going to go through and talk about what you can deduct. So next slide, Steve. So there is limits to the amount that you can claim. So the rules are a little bit sticky when it comes to credits that you can claim. Surprise, surprise. CRA is not the best at explaining anything. So this might take a read through a couple times if you're looking at this after. So it is the lesser of any expenses that you actually paid in 2023 or any subsequent years, or if you're really late on your taxes, predecessing years. Or so it's either the total of that or the lesser of $1,000 or 20% of your employment income from artistic activities, minus any of the following amounts that you can deduct. So any musical instrument expenses, any interest for if you have to use your motor vehicle to attend your workplace environments, or the CCA of your motor vehicle. So CCA, it's a big can of worms to open for me to explain it right now, but essentially what it is we are including the cost of your vehicle every year over a period of time. So if you had a vehicle for 10 years, every single year you're going to get a deduction for the cost of that vehicle. And the nice thing about this is if you don't use all of your expenses in 1 year, you can carry forward this forever. So that's good. We like that. We like expenses that we can carry forward. All right, so I just wanted to give a little bit more detail on expenses that you can claim as a musician. So any maintenance fees for your instrument. So if you're a piano player and you need to get the chords fixed in the back, that's an expense that you can deduct. Any rental fees. So if you're getting something fixed in the meantime and you have to rent an instrument in order to perform your job, you can claim that as a deduction. Any insurance costs or any of that capital cost allowance, you can also claim that as well. So we're going to go through some math. Hooray! There is always a benefit to going through and walking through an example like this step by step. I know it took me a little bit to comprehend all of the rules and the limits that we need to go through. So I wrote a little example and we're going to go through it. So, but I am going to read it on here because it is hard to read from there. Oh, and it's even harder to read. Okay. So artist expense example. Marielle is a violin player who works with the local theater company for her dramatic performances. She's considered an employee and receives a T4 each year. She has a signed employment contract, and her employer directs her what time she's to be at work. Stated in her employment contract, Marielle is responsible for maintaining the instrument that she plays, which cost $450 in upkeep this year. And she paid $800 in additional costs for sheet music that she was not reimbursed for. How much do we think Marielle gets to claim as a deduction? Let's walk through the calculation. So we know that there's two areas that can be calculated here. So it's either the lesser of the expenses that she actually paid outside of her maintenance of her musical instrument. So that would be the $800 that she paid for in sheet music. It is either the lesser of $1,000 or 20% of her employment income, which is $4,000. So $1,000 would be less. And then less her musical expenses that she had to pay for to repair and upkeep her violin. So it would be $1,000 minus 450, which gives you 550. So 550 is less than the $800 in sheet music. So she can claim the lesser of $800 or 550 in addition to the musical instrument expense that she incurred. So for a total, she can claim, oh, did I do the math wrong? The musical instrument expenses of 450 plus $550 of total expenses. So that's giving her quite a good deduction of $1,000 on her tax return. So worthwhile to take those calculations and have those discussions with your employer and to get that T2200 as required as part of your deduction from your employment. So they just need to confirm that you can actually claim those deductions as well. Okay. All right. This next deduction that you can claim is home office expenses. So this has been quite a hot topic with COVID. If you have a home business, this applies to everybody. So this is from the perspective of a T4 employee. So please keep that in mind as we go through the criteria. So the employer has required you to work from home. This does not include that the employer has okayed you to work from home 2 days a week. This has to be an agreed upon as part of their employment contract. Part of your employment contract is that you must work from home a certain amount of time or half a year. That has to be stipulated in your employment contract in order for you to qualify for this criteria. You must be paying out of pocket for your expenses. You're not reimbursed by your employer. The workplace has to be a segregated space that is used for business activities and where you're regularly meeting with clients. The expenses have to be directly used for work, and you must have assigned 2,200 in your tax agreement as well. So they will provide that for you every single year. Okay. So we're gonna go through another math example. Yay! We love math. All right. So this example, Cedric works remotely as a graphic designer for a company that's based out of Edmonton. He lives in Lethbridge and conducts all of his business from his home office. Cedric has a dedicated home office space, which represents 7% of the square footage of his house. And he has the following expenses. So he pays $1,000 monthly in rent, $285 in utilities, and $100 in internet. How much home office can Cedric claim? This is our calculation. So we're taking all of the expenses. So the 1,000 plus the 285 plus the $100, and then we're timesing it by 12 months because he's experiencing this every single month. And then we are getting $16,200 in yearly expenses. But he can only claim 7% of that because that's the square footage allowance that is designated for his home office. Anything additional to that is not allowable. So another thing to consider with this as well, the expenses have to be reasonable. They can't be grossly overstated. You have to provide evidence if they were ever to come back and look at this. Quite often, they're going to look for your utility statements. They're going to make sure you're not deducting all of the utilities that you're using. And the square footage amount for your home office space has to be reasonable as well. So you can't say that 50% of your home is your home office. It has to be within reason. If you do have evidence to support that, that's fine. I know, for example, I work with a CrossFitter that has a gym space in his house, and his gym space accounts for 20% of the total space in his house. So he's going to claim 20% of his home expenses as an allowable deduction because that's how much it takes to operate that space. All right. Now we're going to look at self-employment. I feel like most people will be reporting under this as well. So these things that we're going to talk about apply to all sorts of business. So even if you're not an artist or you're not selling or providing services in that capacity, I hope that you can glean a little bit of information from this as well. So the tax slips that you're going to probably be getting as an artist are T4As. So grants are reported on there. Any subsidies will be reported on there. I know through the art gallery that I'm the treasurer for. We provide T4A statements to any artists that provide work to be in the space. But there doesn't necessarily have to be a slip provided in this situation. It's going to be cash in is considered revenue, cash out is considered expense, and then the remainder is going to be your taxable income. So the tax schedule that you would use in this case is the business schedule, which is the T2125. I know means nothing, but just for reference, it's the T2125. And the deadline to file self-employment income is June 15th. Woo! So you have some extra time. And then, however, the payment, if you do think you're in a payment position and you owe taxes, the payment is due on April 30th. So I recommend not leaving it to the last minute, but it is an option. So what can I deduct if I have self-employment income? Well, you can deduct anything, not anything. Roll that back. You can deduct expenses incurred in order to make a profit. So we want expenses to be reasonable. Expenses need to have proof of payment, and they have to be within reason. So your golf dues that you incurred, probably not an allowable expense because that's going to be for your own recreational use. So keep that in mind. It's key to maintain some proper documentation. So I would recommend doing a monthly income spreadsheet where you include all of the things that you've received for cash, everything that you've paid out, start from your bank statement, work backwards. Put everything in a spreadsheet. It'll save so much headache at the year end. Save all of your income receipts, save all any pay stubs that you have. It'll make your life so much easier. Yeah, next slide. Meals and entertainment. Did you know that you can claim 50% of the meals? Not your personal meals, business meals. So if you're having lunch with a potential buyer of some artwork, that's tax deductible, but at 50%. It's recommended that you keep a calendar for any meetings that you do have, just so when you're going through, hopefully not at the end of the year, going through all of your meetings and recording when you met with people. If you do it on a monthly basis, keep yourself organized. It won't be scary, I promise. We have phones with calendars for a reason. That's a good resource. Keep that regularly updated and it'll save you a lot of time. Home office, this goes the same for employed individuals with the T4. You can claim home office. So that would be utilities, insurance, rent, mortgage interest, property tax, but they are going to be prorated for the office use space again, just as before. And then the space that you use has to be regularly only maintained for your business activities as well. Your cell phone. Who doesn't want to deduct a portion of their cell phone? Who's on their phone all the time with business clients? I know I am. I use it way more than I would like to for not personal things. So, an example, if you use it for 50% of business activities, claim that 50% of use of page for your bill. So, it's not a bad thing to keep them all tied to one and have one cell phone and just claim a deduction for your amount that you use your cell phone for your business activities. Next. Automotive expenses. Ooh. One caveat with this, you will have to track all of your miles that you drive all the time. It's not fun. But CRA will audit you if you do not. If you're unable to provide this, they will disallow any expenses that you do claim. Luckily for you, I have created a spreadsheet that we will be sharing with you to track your miles on Excel, on Google Docs. You're welcome. Yeah, you're welcome. So, other deductions that you can claim, any registration fees, insurance, fuel costs, maintenance, oil changes, that kind of stuff. Yeah. It's pretty, if you're using your vehicle a lot for business expenses, keep track of them. It's really going to help reduce your income and it's worthwhile to keep tracking it, even though it's annoying. I know there's a lot of clients that don't do it, but if you have the records, you will be set up for success. Key piece with all the deductions is that CRA will be reviewing the reasonableness and will disallow as they see fit. It's not fun. Not fun at all. So keep track of your expenses. It'll save you a lot of headache later. That's okay. How about I tell a joke? Just kidding. I don't know any. I don't know any. Perfect. We're back online. Good job, Steve. So I've included a little snippet for you of the T2125. Woo. So these are just some examples of expenses that you can claim. Any advertising, meals and entertainment. Remember, it's only 50% of your expenses that are deductible here. Any bad debts, if you can't collect from a client, you need to write it off. You can write that off. Interest in bank charges, office expenses, supplies, professional fees. If you're getting your tax return done by an accountant, that is an allowable deduction. We love that. Any travel expenses, utilities, salaries, if you're paying someone else to complete the job with you, that's a deduction as well. Oftentimes with T1s are personal taxes, we will get the question of, should I incorporate my business? Is it worth it? Those are things that you should consider. as you grow your business, as you earn more revenue, what are the benefits? Is it going to cost me more? Yep, it is. But that could be worth it to you. So it's never one size fits all. It's definitely a discussion to be had with yourself or with a trusted business advisor, like an accountant or a lawyer. But two of the main factors you should consider if you're looking to incorporate it or if you're having those kinds of questions on what's the next step. What's your income level? Corporations are taxed at a lower rate. So if you're a personal, you're going to be taxed at approximately 30%. If you're a corporation, you're going to be taxed at 12%. So there is that to consider when you're looking at that. There's also some legal liability. So if you have an accident at work or if you really screw something up, the business is liable, not you personally. There are some gray areas with that, and I won't necessarily talk about that today, but that's just another consideration. Something else that I tell clients too is if you have all of the income that you're making throughout the year, if you're spending all of it and you're not going to leave any remaining in the company, it's probably not worth it for you to incorporate. If you have a business that's operating very successfully, you're getting a lot of cash, you have a lot of income, but you're not in the place that you're spending every single dollar that you're earning, it might be worthwhile to incorporate because you're going to, one, pay a lower tax rate. Two, you'll be able to keep the income earned within the company and draw it out and report it on your personal income tax as you need, as you draw it out. That's when you're going to report it as personal income in that situation. The cost of incorporation is another thing to consider. So you're going to have to, instead of one tax return, you'll have to do two tax returns, one for your corporation, one for your personal tax. Is that going to cost more money? Probably. Is that going to cost a little bit more headache? Maybe. It depends on how organized you are and how ready you are to do that. But it could be worth it in the long run as well. So evaluation of whether incorporation is worth it to you. So revenues and expenses, less any personal needs. So anything that you draw out of the company to supply cash for your life, less any of your savings goals, less any of your debt obligations is going to give you your remaining income. If that number is not positive, it's probably not worth it to incorporate. So just a good measure to see if you're ready for that or to see if your business can hold on to that as something to consider. Okay, so now we're going to look at a self-employment example. More math. Woo! We love it. These are actually really fun to write. I don't get a lot of creativity to express, but these kind of filled my bucket a little bit. So indulge me a little bit. All right. What's Sandy's taxable income? Sandy's a painter and performs mostly contract work and sells individual pieces online and sells them at local markets. Not enough. Sandy owns her own vehicle that they drive to meet with potential clients, and they have a dedicated workspace that they rent. Sandy's income earned includes $15,000 from a project with the city, and she received a T4 in March of this year. They also sold 20 pieces of work during the year, which earned about $10,000. Nice round numbers. You're welcome. Sandy also has a part-time job with the art gallery and earned $25,000 of income. That was on a T4. Sandy also had some expenses this year. Good for her, because that's going to be a lot of income to report on. They paid $1,500 in supplies. that they purchased this year, and they used $1,000 of supplies that they purchased in the prior year. They paid $3,000 in home expenses this year, $500 in studio rent, $2,000 in vehicle repairs, $3,000 in fuel, $1,000 in vehicle insurance, and they used their vehicle to drive 6,000 kilometers out of a total of 10,000 kilometers. So what do we think Sandy's taxable income is? I'll show you. Woo. All right. So I was feeling really nice, and I made you all a template that you can take home. Woo. If there are formulas that are messed up in there, apologies in advance. I will help you if you want to take a screenshot of it and send it to me and say, where's my error? I will help you find it. All right. So we only have 2 sources of income included in her self-employment calculation, but she had 3 sources of income. Where is the other amount? Well, she was T4'd that amount, so it's not included in her self-employment income. But we will include her T4A amount that they earned from the project from the city, and we will include her sales of $10,000 into her total income. Additionally, they had some other expenses to deduct. So they had office rent. So we included that in the office category. It should be in the rent category. I'm not perfect. They also had supplies expense. But wait, they paid $2,500. I'm remembering from my slide. They paid $2,500, but we're only recording $1,500. Well, the supplies that they paid for were in the year before. So we're claiming everything on a cash basis as the expenses are incurred. That's when they're going to claim them on their tax return. So we only have $1,500 because the $1,000 that they paid was claimed in the prior year. Now, these have to be reasonable. You can't claim a bunch of paint that you're going to use personally as an allowable expense. It has to be reasonable. It has to be documented. Keep track of these things. It has to relate to the business that you're performing. If your medium is fashion design and you're buying a bunch of, I don't know, clay, is the clay going to be in your collection? Maybe. I don't know. But if that's not your main source of business and you think you're going to use it personally, don't claim as a business expense. Don't do it. You will get caught. Just joking. I don't know. Maybe. I don't know. And then additionally, we have the vehicle expenses on here. So I have created a little calculation for you. You're welcome. So we had indicated that 6,000 kilometers were business use. 10,000 kilometers were driven for the year. So therefore, only 60% of the kilometers were used for business. Therefore, only 60% of your expenses that you incurred are allowable for business. So you will see a calculation of allowable and non-allowable. Yay. They used a mileage log. It was great. They have proof. Something that you will notice is not on here. Her home expenses. Sandy worked from a studio and did not use her home as a business location. Therefore, your home cannot be deducted. Your home expenses cannot be deducted on your tax return. There is gray area, so talk to your trusted business advisor. Use it reasonably. Anyways, so overall, we're seeing that Sandy's net income and taxable income, therefore, is $13,900. A lot different from the $25,000 we started with. So Good job, Sandy. All right, we're coming near to the end. Actually, the last slide. Is that the last slide? I thought so. Um, there are some other considerations that I wanted to talk to you about. GST, yuck. We love it. Sadly, it's part of our life. So it's okay. It's only 5%. Yeah, exactly. Thank you. So there are some thresholds that you will have to consider when you're looking at self-employment income only. This is only for self-employment income. So a couple of the thresholds, if you earn over $30,000 in gross income, so that's before expenses, you will have to register for GST. You must then charge GST and remit GST. So you might have a situation where you're paying for more supplies in that period and you didn't earn as much income during that period that your GST relates to. So therefore, you probably can claim a refund. So it works both ways. If you're having really high income, we don't want you to lose income here. So it's probably a good sign that you have to pay GST. It's on top of your gross income. It's not yours. Just get that out of your brain. It's not yours to begin with. It's all the government's. You're just a vehicle for collecting. That's it. So don't consider that your income. Don't consider it part of your expenses. Please report it separately. It'll save you a lot of headache later. 5%, not bad. And then when you are GST registered as an individual, it's usually only a yearly thing that you'd have to remit, and it's due on June 15th. So that's one of the ickiest things to consider. GST is not fun. We don't love it, but it's part of our business life. And with that, you know everything you need to know about taxes, and you're welcome.
Everyone, I know that was some good clapping, but I would like to hear just a little bit more clapping for Steph Hogan, doing a wonderful job. So I'm going to wander a little bit. Hopefully not trip and fall. We're going to open the floor to questions. So I've got some questions. Do you guys have any questions of taxes?
Ask
I will
me the
come to you.
questions. Let's go.
Okay, I'll start. Okay, hold on one sec. I don't take down the whole.
This is fun.
Okay, I'm coming to you. Oh. Okay, for the people at home, just state your name and then let's hear a question for Steph.
Ooh. Sure. My name is Suying. Steph, thanks so much for that talk, and Steve and AAC, thanks for organizing. My question is for those contractors receiving a T4A from an organization.
Thanks, Suying. I knew this was coming.
It's on my mind. So you mentioned early in your slides, you had a question around, or you had a statement around trips and people claiming trips on their taxes. I'm wondering, an organization invites an artist to do a project. They reimburse them for travel, but then the organization books, say, accommodations on their behalf. Do they have to, even though the accommodations dollars did not ever get reimbursed or touch their account,
Right.
is that trip taxable?
No, that's a requirement of their business activities. So I would not recommend that's included in their income. It's just an in and an out. I mean, if you want to get technical, you can record it as income and then remove it as expense. So it all nets out. Yeah, we love that. Oh, Steve. Right.
We have another question over here. State your name and then a question for Steph.
Hi, I'm Alan. I have a question I think a lot of people in Lethbridge probably have.
Okay.
I got a Story Hive grant to produce a video. So it's an
Okay.
artistic grant, but it's not income. I'm not employed. I'm also not self-employed. So it falls outside of those categories. I think I've learned the answer to the question that I came for, but you have to declare the full amount of the grant you receive and then deduct the expenses you use to create the product. Is that correct?
Yep. Yep. Sorry to cut you off. Yep. That's exactly correct. So you would record the full amount and that would be included on the form. And then that T4A, it can be pulled into that statement. That's the 2125. So the statement of business activities. And then you would deduct any expenses that you incurred in order to.
Didn't get a T4A. Not sure I'm going to. What do you do in that case?
How much was the grant?
This year, for
Oh,
last
sorry,
year's-
you don't have to say like it was a
12 grand for last
Okay.
year.
Yeah, good job.
Yeah.
For last year and you haven't received anything. Interesting. I might want to reach out to them and see if I should be expecting a T4A. Because technically you should, unless it was. Yeah, I don't know. I would probably follow up.
So so the grant covered 2-year period. So I got a bunch of it last year, a little bit the year before, and then some this year. So maybe they don't give me a T4A till next year's taxes.
Possible.
I'm going to talk to them.
Yeah, I would talk to them because if you received cash in hand, I think you should probably get something during that year. Yeah.
Okay, thank you, Alan.
Yes.
We've got a question from the online folks. I believe Maria Livingston was wondering if you file your taxes on TurboTax, can you claim that amount?
Like statement of business activities, probably. TurboTax does have the capacity to do that. I have seen like the 2125 on there as an available feature that you can include. I think you do have to pay a fee to get that when you do use TurboTax. So it's definitely a possibility on there. And the form would look similar to the snip that I had. But you should be able to use TurboTax to file your tax returns for sure. Or Wealth Simple, whichever one is now the thing.
Okay, great. I had a quick question, just for clarity's sake. When you're talking about the costs of incorporation, just to be clear, so that's like a one-time to incorporate kind of fee, and what just maybe if you can expand on that, how much it would cost to incorporate, so a person can kind of gauge if that's something worth their while down the line. It's
sure.
essentially as an investment.
Yep. I think incorporation costs anywhere from like $600 to $1,000, depending on like what your legal fees are and who you go to, I guess. But so that's a one-time fee to incorporate. Subsequently, though, you will have to file your taxes,
Twice.
and prepare like a year end essentially. So that's gonna have some additional fees on it as well, unless you prepare them yourself, and then it could be okay. But I would definitely get some advice from a trusted advisor, like an accountant or a lawyer on.
Like someone like yourself. Oh, if only we had business cards for such a person by the door.
They are at the door.
There's a pile of business cards by the door.
Yes.
So if you do have these kind of questions, Steph would be an excellent resource.
Yes.
And you should pay her some money to do that for you, maybe.
No, you don't have to.
Well,
With our
good.
firm, we do some free advice. So if it's just like a one-off question, you've got a burning desire to have an answer to a question that has been on your heart for a while, and you say, I remember that lady in the turtleneck and the blonde hair. Maybe she can help me answer this question. I am happy to do so. There's a phone number on there if you want to give me a quick call. Do not use it to excess, because it will start bothering me. So just consider me when you make those calls. I'm happy to help. I'm happy to give advice. I am by no means the be all and end all for all your tax needs and considerations. But I do know a lot and I work with this a lot. So I'm happy to answer any questions if you need any help.
One quick last thing as well too, because the examples that we had here, some of it was more involving the music sort of side of things. Is there like a resource that people can kind of go to look at for comparative things? For instance, like if you're a painter, right? What would maybe be acceptable as something that might fall into that same realm, same way as like repairing an instrument?
The Canada website has a lot of information for you that you can rely on. Like use your use your judgment on whether it seems like it's a relevant expense.
Mhm.
You know your business better than I would know your business. So I would say like the person that's preparing their own tax return, that they are the authority on whether it's business related. So I mean that's a resource. If you have a question that it's not answered on the slides or it's not applying to your particular medium that you work in, I would recommend looking on the Canada website as a good resource. Google is our friend. We love Google. I use it at work all the time. So no judgment if you have to. But yeah, definitely you can call up me, you can phone a friend. But yeah.
Is there any other questions from the floor? Anybody? Speak now or forever hold your peace. Talk about taxes.
If you don't want to talk into the mic, I'll stick around for a while.
That's true. We can always do it after the fact as well. And anybody who didn't get the resources, the spreadsheets that Steph made, just get at me. My email is engagement@artslethbridge.org. I'd be more than happy to, if I can't answer the question, direct you to Steph or whomever can answer any given questions for you. Thank you all so much for coming.
Yay.
This is the first go round, especially for you folks online. I hope that everything sounded okay and you could hear everything and see all the things that you needed to see. Anybody that's interested, I'd be remiss if I didn't mention, at CASA tonight, there's another Allied Arts event going on it's a leap year and it's still February, so it's still Black History Month, and they've got Keeping It Real, which is a pop-up exhibition happening there, showing some films by some great Black artists. So if you're interested, that's going to be starting at 7 o'clock, or you can hang out and maybe have a soda pop with us here at the Slice. And a big thank you once again to Derek and Jesse and Amanda and all the folks here at the Slice for hosting. Really appreciate it. And
I just wanted to say thanks to y'all for showing up and taking initiative to solve your tax needs and problems. And yeah, I think good on you for taking the initiative to learn.
thanks so much. And think ahead, plan ahead.